Circular Flow Model 5. Overview. An economy is a complex system, and it is impossible to model or even describe all the different forces that has an impact on the level of economic activity. To understand what determines the level of economic activity, we need to simplify things by focusing on the most important forces that shape an economy. The circular flow model is a simplification of how the economy works. In a complete circular flow model, the interaction and interdependence between the major participants, households, firms, government and the foreign sector, in the various markets, factor, goods and financial, are captured and explained. You will learn how the decisions these participants make and the way in which they interact have an impact on the economic life of every individual in our society. You will also see how the decision of one participant in the economy impacts on and elicits a reaction in the behavior of another participant, and the influence this has on the level of economic activity. In this section, we consider a model that includes only two participants, households and firms, and two markets, the goods and factor markets. Topic outcome. After you have worked through this learning unit, you should be able to use the circular flow model to illustrate and explain the three flows of production, income, and spending, the interdependence between households and firms, the real and monetary, nominal, flows through the factor market and the goods market. Simple circular flow model with two participants and two markets. Concepts. Familiarize yourself with the following concepts before you start this unit. Households. A household can be described as all people who live together and who make joint economic decisions or who are subjected to others who make such decisions for them. A household can consist of an individual, a family, or any group of people who have a joint income and take decisions together. Every person in the economy belongs to a household. Firms. A firm can be described as the unit that employs factors of production to produce goods and services that are sold on the goods market. Factor market. It is the market in which the factors of production are sold and purchased. Goods market. It is the market in which goods and services are sold and purchased. Real flows. It is the flow of real things such as goods and services or the factors of production. Nominal, monetary, flows. It is the flow of money in the form of money income, wages and salaries, interest, rent and profits, and spending on goods and services. Stocks and flows. An important distinction is made between a stock variable and a flow variable. The distinction has due to with whether the variable is something that is measured at a particular point in time or over a period of time. A stock variable is something that is measured at a particular point in time, say on December 31, 2018, while a flow variable is measured over a period of time, say monthly. The factor of production capital is a stock variable since the value of the machines, tools and buildings that a firm owns is measured at a point in time. For instance, it can be said that on the December 31, 2018 the value of the capital stock for firm X was $10 billion. Investment, that is the purchasing or creation of capital goods, is a flow variable since it takes place over a period of time. For instance, it can be said that during the year 2018 the value of investment by firm X was $1 billion. In other words, firm X has invested over a period of a year $1 billion in machines, tools and buildings. From the example it is clear that stocks and flows are related. Stocks changes because the flows changes. As firm X increases its investment, its capital stock will grow. Examples of stocks are wealth, debts, assets, balance in your savings account and inventories. Examples of flows are income, spending, production, sales, investment, change in inventories and profits. Read through the following extract, Business Tech, 2017, on the technical recession in South Africa in 2017 and reflect on the questions that follow. Technical recession in South Africa. The latest gross domestic product, GDP, data released by Stats SA shows that the South African economy declined by 0.7% in the first quarter of 2017, putting the country into a technical recession. While the economy has slowed to a crawl over the past few years, the country has managed to escape the dreaded official recession tag. In economic terms, a technical recession is described as 2 consecutive quarters of economic decline. The last quarter of 2016 showed a 0.3% decline, with the latest decline of 0.7% in the first quarter of 2017. South Africa fits the bill. Source: Recession/. If one takes a closer look at the different flows of production, income and expenditure, what is clear is that during this recession the decline in production was mainly due to lower production levels in the manufacturing and trade sectors. Associated with this decline in production is a decline in spending by households. The decline in production and spending is also associated with a decline in income of households. It is this relationship between the flow of production, income and spending that we will investigate in more detail in this learning unit. Questions for reflection. Why do you think the spending by households decline if the production in the economy declines? What would your household do if the income of your household increases? What would firms do if households decreased their spending on goods and services? 5.13 Major flows. After you have worked through this section of the learning unit, you should be able to identify the 3 major flows in the economy and describe the relationship between them. The 3 major flows in the economy are: the production flow comprises the production of goods and services by firms. It is here that the question of how to produce is answered. The income flow involves the flow of income to households which they earn from making the factors of production available for the production of goods and services by firms. Based on this income, the question of for whom to produce is answered. The spending or expenditure flow entails the spending by households on goods and services produced by the firms. It is during this flow that the question of what to produce is answered. Thinking about these flows, choose the correct option in the following question. Do you think a person who is employed by a factory that produces mattresses is part of the flow of production, income and spending? The person is only part of the production flow. The person is only part of the income flow. The person is only part of the spending flow. The person is part of all 3 flows. While the person is working in the factory producing mattresses, he or she is part of the production flow. When the person is paid, he or she is part of the income flow, and when he or she spends this income, he or she is part of the spending flow. The person is therefore part of all 3 flows. The flows are not independent, but interdependent and closely linked. This interdependence between production, income and spending can be represented by the following circular flow diagram. 3 major flows. A change in the flow of production will bring about a change in the flow of income which, in turn, will change the flow of expenditure, which again will change the flow of production. In the same way, an increase in spending will bring about an increase in production which, in turn, causes an increase in income. Similarly, an increase in income will bring about an increase in spending and then production. A major part of the study of macroeconomics is about how changes can be brought about in these flows. Link between production and income. Link between production and income. The reason we produce goods and services is to satisfy our needs and wants. To produce these goods and services, factors of production are needed. In a market system, the factors of production belong to households, who are then paid an income by producers for the use of the factors of production. As production takes place, a flow of income is created. If you are working, employed, the contribution of your effort is part of the production flow, while the payment you receive is part of the flow of income. Link between income and spending. Link between income and spending. We have now established that as production takes place, a flow of income is created. This income, which flows to households from firms, is then spent by the households on the goods and services that were produced, and as they spend, a flow of spending or expenditure is created. As you spend the income you received from taking part in the process of production, you are creating a spending flow. Link between spending and production. Link between spending and production. The spending in the economy is linked to production. When we bake bread, we are taking part in production. When we are paid for baking the bread, we are part of the income flow, and when we spend our income on buying the bread, we are part of the spending flow. Example of the interdependence. James is a family man and works at the local bakery as a bread baker. To illustrate the circular flow between production, income and expenditure, we are going to use part of James's life story. As James works as a baker and bakes bread, he is part of the production process. At the end of every month, James receives a salary from the bakery for his bread making. The salary James receives is income for him and his family. James's wife Martha does the shopping for the household at the end of every month. She buys everything the family needs, including the bread James helped bake. James's family is now part of the spending or expenditure process. That will happen all the time as long as James works and spends his income. There is thus a continuous circular flow between production, income and spending in the economy. A change in production, such as an increase in production, will lead to an increase in income, which, in turn, will result in an increase in spending. Do the following activity before you proceed. Activity 1. Indicate whether you agree or disagree with the following statement. The lower the level of production in a country, and the lower the level of income and spending, the poorer the country. Disagree. Agree. 5.2 Participants in the circular flow, households and firms. After you have worked through this section of the learning unit, you should be able to describe the different participants, households and firms, in the circular flow model. Describe the role households and firms play in the circular flow model. Describe the role households and firms play in solving the economic problem. Simple circular flow model with 2 participants and 2 markets. Households. Households are all the people who live together and who make joint economic decisions. Your family is a household, and a person living on his or her own is a household. Communes of friends who live in one house and share their expenses also form a household. In a market economy, households are the biggest owners of the factors of production. They own all the labor and entrepreneurship as well as the capital and natural resources, land. Even though businesses own the capital goods, buildings, factories, tools and machines, these businesses are, in turn, owned by households through the shares they have in them. Some households may own only a few hundred rand worth of shares, while others may own thousands or millions of rand worth of shares in a company. The point is that businesses are legal entities that are owned by people, households. These households own a firm's capital goods and have a right to its profit in the form of dividends. Households make these factors of production available to the economy, where they are used by firms to produce goods and services. In exchange for the use of the factors of production, households receive an income from firms in the following forms. Salaries or wages in return for their labor services. Interest on their capital. Rent from the ownership of natural resources such as agricultural land. Profit from entrepreneurial activities. The most important source of income for households in South Africa is the wages and salaries they receive in return for their labor services. To earn an income, households must therefore take part in the production of goods and services. This is a vital decision that households have to make. They have to decide to whom they will make their factors of production available, how many of these factors of production and at what price. The more factors of production a household owns, and the more valuable these factors are, the higher the income of the household will be. This all happens in the factor market. Households are therefore active participants in the factor market as suppliers of factors of production. The primary aim of households is to maximize their satisfaction with their limited income. Households try to maximize their satisfaction by using their income to buy consumer goods and services that satisfy their needs and wants. These goods and services are bought on the goods market. Households are therefore active participants in the goods market as the demanders, buyers, of goods and services. They are the consumers in our society and responsible for consumption spending, which is spending on consumer goods and services. If you think back to the basic economic questions of what, for whom, and how to produce, you will immediately recognize the importance of households. It is the households, through their income and consumption expenditure, that the questions of what to produce and how much of it and for whom, are answered. What households, consumers, want and can afford, their demand, determines what firms will produce. A change in their behavior, even a small one, has a significant impact on the flow of production, income, and spending. The characteristics of households may be summarized as follows. They are owners of production factors. They are sellers of production factors. They are consumers of goods and services. They are buyers of consumer goods and services. Firms. In a market economy, business enterprises or firms are responsible for the production of goods and services in the economy. The bulk of the goods and services in South Africa are produced by privately owned businesses, and they are therefore one of the key decision makers in our economy. Firms combine and transform factors of production to produce goods and services. They are therefore active participants in the factor market as buyers of the factors of production that are owned by households. In return for the use of the factors of production, firms pay households wages and salaries for labor, interest for capital, rent for land, and profits for the entrepreneur. This is part of the cost of production for the businesses. Businesses do not only produce the consumer goods and services that households demand. They also produce capital goods, factories, machines, and tools that are used in the production of consumer goods and services. This creation of capital goods is known as real investment. While households try to maximize their satisfaction from their limited income, firms try to maximize their profits. Profit is the difference between revenue and expenditure. Revenue is earned from the selling of goods and services to households in the goods market. Firms are therefore active participants as sellers, in the goods market. Firms strive to keep their revenue as high as possible and their expenditure, which is determined by their cost of production, as low as possible. Looking back at our economic problem of what, how, and for whom to produce, firms are responsible for how to produce, and they continuously search for ways to make the production of goods and services more efficient. This is important because our resources are scarce and we cannot afford to waste them. The general characteristics of firms may be summarized as follows. They are buyers of factors of production. They are producers of goods and services. They are sellers of goods and services. Do the following activity before you proceed. Activity 2. 2.1 Indicate whether the following statement is true or false. T. F. The only factor of production that is owned by households is labor. The rest of the factors of production are owned by firms. 2.2 Write down the correct remuneration for the factors of production. Write down the correct remuneration for the factors of production. Labor, capital, natural resources, entrepreneurship. 2.3 Indicate whether the following statements is true or false. T. F. The more factors of production a household owns, and the more productive the factors of production are, the higher the income of the household. The reason households make their factors of production available to firms is to earn an income which they can use to buy goods and services to satisfy their needs and wants. Firms own the factors of production that they use for the production of goods and services. The aim of firms is to maximize profits. 5.3 Markets in the circular flow, factor market and goods market. After you have worked through this section of the learning unit, you should be able to describe the factor market and the goods market. Describe the role of households and firms in these markets. Simple circular flow model with two participants and two markets. Factor market. The factor market is the market in which the factors of production are bought and sold. It is through this market that households supply businesses with the factors of production, in exchange for an income in the form of wages and salaries, interest, rent and profits. Two active participants in this market are households, as the suppliers of factors of production, and firms, as the demanders of the factors of production. The factor market includes the labor market as well as the market for capital. Goods market. There are literally thousands of different producers of goods and services and millions of different consumers of these goods and services in the economy. In macroeconomics, all these different markets for goods and services, which include both the producers and the consumers, are grouped together under the heading of the goods market. In economics, this grouping together is called aggregation. It is in the goods market that households, consumers, buy their goods and services and the producers supply their goods and services. Two active participants in this market are households, as the demanders of goods and services, and firms, as the suppliers of goods and services. 5.4 Real flows and nominal flows. After you have worked through this section of the learning unit, you should be able to distinguish between real flows and nominal, monetary, flows. Identify the real and nominal flows through the factor market and the goods market. Simple circular flow model with two participants and two markets. Real flows refer to the flow of real things such as goods and services or the factors of production, while nominal flows refer to the flow of money in the form of money income, wages and salaries, interest, rent and profits, and spending on goods and services. In the factor market, the real flow is the flow of the factors of production, the quantity of labor, capital, land and entrepreneurship, from households to firms. The monetary flow is the flow of income in terms of money from firms to households, in other words, the amount that is paid in wages and salaries, interest, rent and profits. In the goods market, the real flow is the flow of goods and services from firms to households. The monetary flow is the flow of spending, payment, by households to firms for goods and services. Do the following activity before you proceed. Activity 3. 3.1 Which one of the following is a real flow in the goods market? The spending flow on goods and services from households to firms. The flow of the factors of production from households to firms. The flow of goods and services from firms to households. 3.2 Which one of the following is a monetary flow in the factor market? The flow of factors of production from households to firms. The income flow from firms to households. The spending flow on goods and services from households to firms. 3.3 Indicate whether the following statements is true or false. T. F. If more factors of production flow to the firms, then the income flow to households will increase. The factors of production flow through the factor market, while spending by households flows through the goods market. 5.4 Complete circular flow model. Now that we have identified two main participants in the economy, namely households and firms, and two markets, namely the factor and goods markets, we can design a model to show the interactions between firms and households through the goods and factor markets. The circular flow model that we will build consists of two participants, namely households and firms, and two markets, namely the factor market and the goods market, and two kinds of flows, namely nominal, monetary flows, and real flows. Simple circular flow model with two participants and two markets. After you have worked through this section of the learning unit, you should be able to use the circular flow model to illustrate and explain the interdependence between households and firms. The real and nominal, monetary, flows through the factor market and the goods market. The impact of a change in a flow. Flows between households and firms through the factor market. From households to firms, there is a flow of factors of production through the factor market, as illustrated by the dotted line. This is a real flow. An example of this flow would be you leaving your house in the morning to go to work at a firm. This is an example of a real flow of labor. Then there is also the flow of capital, land, and entrepreneurs from households to firms. This real flow of the factors of production takes place through the factor market. Flows through the factor market. From firms to households, there is an income flow through the factor market as firms pay households for the use of the factors of production owned by households, as indicated by the solid line. This is a monetary flow. An example of this flow would be you receiving payment in the form of a wage by the firm you are working for. Rent for land, interest for capital, and profits for entrepreneurs are all nominal, monetary, flows and part of the income flow. Flows between firms and households through the goods market. Firms use the factors of production to produce goods and services that they make available to households through the goods market. This is the real flow of goods and services from firms to households, and it is indicated by the dotted line. An example of this flow would be the actual groceries you buy from, say, your local supermarket. Flows through the goods market. Households use their income to pay for the goods and services they receive from firms. This payment for goods and services is a monetary flow from the households to firms through the goods market indicated by the solid line, and it is the spending flow. An example of this flow would be when you pay for your groceries. We can therefore distinguish between two kinds of flows between households and firms, namely real flows and nominal, monetary, flows through the factor market and the goods market. Notice how the nominal, monetary, flow is in the opposite direction of the real flow. Impact of a change in a flow. We can now use this model to explain what happens to the flows if, for instance, spending by households increases. As spending by households increases, the monetary flow from households to firms increases through the goods market. As the goods move from firms to households, the real flow from firms to households increases. This increased spending by households causes firms to increase production since the demand for goods is higher. As firms increase production, the production flow increases and more factors of production are employed. There is thus an increase in the income flow from firms to households through the factor market. Do the following activity before you proceed. Activity 4. Choose the correct term in brackets. As production by firms decreases, the monetary flow, real flow, of factors of production from households to firms decreases, through the goods market, factor market. As a result, the monetary flow to households decreases, since the income flow is smaller, from firms to households. This change in the income flow causes the spending flow by households through the goods market, factor market, to decrease. This, in turn, causes the monetary flow, real flow, of goods and services between firms and households to decrease. Task. It is important that you are able to draw the circular flow model and able to use it to explain what happens to the flows. Practice this by drawing your own circular flow model and use it to explain it to someone else, or to yourself, what happens if production increases. Hint: it is the opposite from what happens if production declines. 5.6 Limitations of the simple circular flow model. After you have worked through this section of the learning unit, you should be able to identify the limitations of the simple circular flow. At this stage, the circular flow model only includes a goods market and a factor market. The state, representing the government's action through the markets in the economy, could also be introduced as an independent participant buying goods and services and factors of production in the various markets. The state also influences economic life directly by providing certain services such as defense, policing and education. In order to finance these services, the state taxes both firms and individual households. The foreign sector is another participant not included in the simplified model. It comprises mainly the imports and exports of goods and services. This participant also operates in the markets for goods and factors of production in the domestic economy. Imports of goods and services may be regarded as an offer of these goods in the various markets, in return for which a reverse flow of money would go to the foreign sector. Exports of goods and services would mean a flow of goods from the relevant participants to the markets to foreign economies, with a corresponding return flow of money. The model can also be extended to include a financial market. Households do not spend all their income. Some of it is saved in the financial market, and firms borrow from the financial market when they invest, when they buy new machines or build bigger factories. The model also assumes that prices of goods, services, and production factors do exist, but it does not explain how these prices are arrived at, determined, and the impact of a change in prices on the flows. Answers to the activities. Activity 1. You should agree. Poor countries have low levels of production, income and spending, while rich countries have high levels of production, income and spending. Activity 2. 2.1 The statement is false. Households are the owners of all the factors of production. For instance, they own capital through shares they have in companies. 2.2. Labor, wages and salaries. Capital, interest. Natural resources, rent. Entrepreneurship, profit. 2.3. The statement is true. The income of households depends on their ownership of the factors of production and how productive these factors are. The more valuable the contribution of the factors of production to total production, the greater the income derived from them. The statement is true. The aim of households is to satisfy as many needs and wants as possible, and to do that, they need an income which they obtain by taking part in the production of goods and services. C. The statement is false. The factors of production are owned by households and not firms. D. The statement is true. The reason firms produce goods and services is to make a profit. Activity 3. 3.1c. The flow of goods and services from firms to households is a real flow and occurs through the goods market. The spending flow on goods and services from households to firms is a nominal, monetary, flow. The flow of the factors of production from households to firms is a real flow through the factor market. 3.2b. The income flow from firms to household is a nominal, monetary, flow through the factor market. The flow of factors of production from households to firms is a real flow through the factor market. The spending flow on goods and services from households to firms is a nominal, monetary, flow through the goods market. 3.3. The statement is true. As households make more factors of production available, their income from the factors of production increases. The statement is true. The factors of production flow through the factor market, while spending by households flows through the goods market. Activity 4. As production by firms decreases, the real flow of factors of production from households to firms decreases through the factor market. As a result, the monetary flow to households decreases since the income flow is smaller from firms to households. This change in the income flow causes the spending flow by households through the goods market to decrease. This, in turn, causes the real flow of goods and services between firms and households to decrease. Checklist. Well. Satisfactory. Must redo. Concepts and relationships. I am able to. Name the three major flows in the economy. Identify the different participants in the economy. Define households. Define firms. Distinguish between the two basic markets in the economy. Distinguish between real and nominal flows. Distinguish between stocks and flows. Diagrams. I am able to use a circular flow diagram to identify the three major flows in the economy and explain the interdependence between them. Identify the factor and goods market. Distinguish between real flows and nominal flows. Distinguish between the following flows: flow of goods and services, flow of spending, flow of factors of production, flow of income. Explain how the flows change if, for instance, production in the economy changes.